The next 3 months are going to be crazy, and I think that's going to benefit gold and silver, which is why I am raising my forecast for both metals by the end of 2025. Let's talk about it as we explore. For those of you familiar with the channel, you know that I have done prediction videos ever since the year 2020. And I do it just for fun. It's just for entertainment purposes. No one should make any decisions based off of where I think the prices should go. And I've been wrong more about silver than I've been about gold. In fact, I've been right about gold every single time. But first, let me preface this by saying that this revision is only done after I've been right. So here's the stipulations that I put on myself when I make these predictions. I always say that silver or gold will reach a certain price by the end of the year. In other words, they could touch that price. Even if it pulls back dramatically, it still will get there. And so that is the foundation from which I'm able to revise upward or downward, whatever I'm thinking is going to happen by the end of the year. So now this forecast is for the next 3 months until the end of 2025. And I'm going to start with gold and where I think it will touch before the end of the year. Even if it falls back down dramatically on December the 31st, as long as it reaches the goal, I can say that I was right based off the stipulations I put on myself. But nonetheless, it's not really about me being right or wrong. It's for fun. But I do feel like my guesses are somewhat educated because I do pay attention to what's moving the markets. And right now, gold is looking really good. And I'm a little bit pessimistic, or I was in the last couple of weeks, thinking we may have seen the top or near the top. And I don't know where the top is going to be, but I'm going to make the guess right now that I think we're going to see gold reach $4,100 an ounce before the year ends. Why is that? Well, because central banks are not selling any of their gold and they're continuing to purchase it. Yes, indeed. Of course, we know China as well as Russia, the two biggest producers of gold. Well, it's in their best interest to continue to accumulate it in these geopolitical uncertainties that we find ourselves in these days. So gold is definitely poised to continue to do well. And we're now seeing it trading at an all-time high, which far surpasses many of the most bullish forecasts for 2025 that were issued by any of the large major Wall Street banks. Gold and silver are having a breakout year, and it's happening because tariffs and wars have changed the way that dollars are used around the globe. So we're entering a very volatile era where China, Russia, and their axis are finding ways to transact without the dollar, and the West is dealing with a massive sovereign debt crisis, and that's part of what's leading gold and silver to go up. Now, the breakout in 2025 leads all other major asset classes and has brought them to the forefront, and the demand from central banks is at a record high. Into this boom in precious metals and in record central bank demand, it's kind of like Netflix versus Blockbuster moment. This could be one of the most monumental and significant developments in gold and commodities that we've ever seen. Everybody understands how Blockbuster's business model became totally obsolete and outdated when Netflix offered the exact same content, but through a streaming platform. The mechanism of delivery dramatically improved, the product was upgraded, the experience by the end consumer was so positive, kind of like night and day, that Blockbuster went out of business and Netflix went from launching its first stream to becoming one of the largest companies on earth, from $1 a share in 2002 to $1,200 today. Of course, now there's a little bit of backlash against Netflix that's happened recently, but the technology is really what's there. ETFs made gold trading accessible to a much larger audience in the 2000s, in much the same way that Blockbuster branches made movies accessible to cinema goers. But the next revolution that could make the ETFs of today obsolete or greatly challenged by better and new competitors might be here now. Gold is experiencing a bull market that has shocked many, and the available ETFs on the market right now turn away so many who don't trust the audits, who don't believe that they're fully backed by the underlying metals, who live in dozens of countries where the ETFs are not available to trade. There are massive problems that the ETF providers know are their weaknesses. The largest gold ETF manages more than $120 billion and growing. Yet what I'm about to show you might be the biggest disruptor to their business model since inception. And I'm going to get into silver's price prediction here in a moment. Billionaire mining tycoon Frank Giustra, along with mining legend Sean Roosen, are well aware of the opportunity in disrupting the current ETF providers with a fully backed, vaulted, audited, verified, yield-bearing financial product, which could be accessible the world over. And Frank Giustra just invested heavily to the tune of owning 17 million shares of a brand new, just listed NASDAQ company called STEX, ticker symbol STEX, the sponsor of today's video, aiming to revolutionize the industry of owning precious metals and commodities by commercializing fully backed, vaulted, audited, and verified ownership of gold and other leading commodities. And it seems that billionaire Frank Giustra, who owns $90 million worth of STEX right now, agrees. STEX wants to do to commodity ETFs what Netflix did to movies and TV shows, and what Apple did to music and phones. They want to dramatically improve the user experience and make it simpler, easier, and better to offer it globally. Right now, STEX is lining up the last details before launching its first product, the fully backed yield-bearing gold one, on top of the major position that Frank Giustra owns. The two co-founders each owned 21 million shares, worth just north of $100 million. So significant skin in the game for the people leading the revolution. Some say that ETFs are not ideal for them, hard or impossible to trust because of the backing of the auditing of them, sometimes because of the management fees and premiums. STEX is launching a potential game changer. And I compare it metaphorically to Netflix. This is like before they launched their first ever streaming, because STEX is just about to launch their first product in the global market. The company has secured $1.1 billion in funding through a mix of equity, convertible debentures, and a line of credit led by Cantor Fitzgerald, the company that was run by Howard Lutnick, Secretary of Commerce, and now managed by his sons. This funding will allow the company to draw upon and should purchase physical gold to back their products, as well as likely add to their own balance sheet. STEX, the ticker STEX on the NASDAQ, would very likely be one of the first publicly traded companies to own gold on their books. A very welcome change. Their vision is to launch several gold products and then to expand to silver and others. Commodities are ripe for a fintech revolution compared with today's ETFs. Owning gold itself does not earn a yield. By now, STEX has pioneered a product that will produce yield, so the owner will essentially get paid to own gold. Do your research on STEX, which looks to disrupt the global giants in commodities, ETFs, and fully backed, audited, and verified ownership, redeemable and secured. Link to STEX in the description below. I mentioned silver there just a moment ago. If they move to silver, well, they probably should, because silver is also, I think, looking good for the next 3 months. I think silver's price is going to reach $51 an ounce. And that's not that far away from where we're at right now. But I think it will break a new nominal record in terms of its price. $51. It doesn't seem unreasonable given what's going on in the world today. But there's more, I think, that leads to silver's price climbing than gold right now. And that is silver's ability to be versatile and flexible upon many different markets, because there's 10,000 uses for silver. And we know that the supply is under great stress right now, not only in China, as I've documented time and time again, but also around the world. The supply chains are under stress, and those stressors are going to continue, I think, into 2026. And of course, we did see a pullback in silver and gold recently, but I think they're poised to regain the losses and continue to climb up. And silver especially, I think, is essentially recession resistant. Does that mean that it is completely foolproof and will not get hurt under recession? No, especially if there's a market crash, we're going to see some damage done. But the fundamentals for silver are so good, I think that it will be short-lived, and there's many different recession-resistant or recession-proof aspects of the economy with green energy mandates around the world and other areas in healthcare, science, technology. that are poised for silver's demand to continue to be strong and challenge the supply. And I think that's what we're looking at here with silver. So I'm feeling really good about silver. $51 I think is doable. Now again, remember, these predictions are just my own feelings on where the price of silver is going to go. It's what I think is going to happen. Does not necessarily mean it's going to be true. I've been wrong about silver about half the time that I made predictions. I've been right about gold every single time, but notwithstanding, I could be wrong about gold too. Don't make any decisions based off of what I say here. But I like to give you analysis, insight, and my opinion as well, and this is what this video is about. But let me know what your thoughts are. Do you think that my targets for gold and silver are doable? Let me know in the comments section down below. And what do you think the price of silver or gold will reach by the end of the year? Remember, they could shoot up to those prices tomorrow and then completely crash by December 31st. And I would still be correct because it reached it and then pull back. This is just about where the prices will touch. So they could go up, hit my targets, come back down. In a way, that's kind of gives me a whole lot of wiggle room, right? There's others that make predictions of where it's going to end up by December 31st of this year. Let me know what your thoughts are in the comment section down below. Hope you found this video informative, insightful, and educational. Would like to extend a multitude of gratitude to each and every one of you for taking the time to watch, and to encourage you to please rate, share, comment, and subscribe.